enabled. WazirX and CNBC TV18 present Crypto, Digital Assets of the Future.
Hello and welcome to this special series. WazirX and CNBC TV18 present Crypto, Digital Assets of the Future. I am now joined by Nischal Shetty, who is founder and CEO WazirX. Nischal, hi, good to have you. And all conversations lead to budget and cryptocurrencies. And there was quite a surprise packed within that budget speech there. And the finance minister, before she started on the subject of cryptocurrencies, did acknowledge the phenomenal rise that we have seen in transactions and interest in crypto in the Indian markets there. We will talk about the tax in a bit, but first of all, she did address cryptocurrencies as the virtual digital assets. So would you say that we have a clarity now that it's not currency, we were not expecting that, but it perhaps is an asset class or a commodity?
Yeah, absolutely. In fact, I think it's a really good way to define digital assets. The biggest confusion, and as a result of the confusion, the biggest problems that most people had, including, I think most from the government, the regulators, was that people are creating private currencies. And now that has been put to rest by explicitly, defining that these are assets. Anything that is not backed by the sovereign is going to be a digital asset, no matter what you call it. And I think that's great, because as an industry also, we've been ensuring that this is seen as an asset and not a currency, because there is really no currency use case of crypto in India, at least today. And I don't think cryptos can sort of take the place of the INR in terms of transaction processing, because it's free to transact in using UPI and stuff. So I think it's a good way to put to rest the long debate that we've all been having, but everyone's been wanting the same outcome, which was, these are not currencies, don't have to give them the status of currencies, but these are assets and utilities which are going to be used on the blockchain for specific use cases and specific applications that they're built on. And with this definition, the road is clear for anyone who's building in the crypto ecosystem. The definition is clear. You finally have a definition. You can open and say that, see, look at the definition, so that's there.
Oh, well, absolutely. Okay, now let's talk about the elephant in the room, and that clearly is that 30% tax. It's high, it's flat, and it is the highest tax proposed in the country there. How do you see it? Because, the last 24 hours since the budget speech came out, whether it's Twitter, it's people, it's conversation, WhatsApp groups, Telegram, everything is abuzz with on, is the party over? Is it going to be a deterrent? Will more people now invest, come into India? And is it only an asset class now for the high net worth individuals, institutions, etc.? How have you decoded the number?
I think 30% is definitely on the higher side for those who were not in that bracket already. Now, whoever was in the highest tax bracket was probably already, or had to already pay their crypto profits in that bracket. Now, what has happened is, even if you're not in the higher tax bracket, if you are making a profit from crypto, you're supposed to pay in that 30% bracket. Now, that is definitely a sort of a dampener for those into crypto. And that's where we're seeing a lot of people from the community talking about this. In fact, people who've not been filing taxes because they don't fall probably in the whole tax bracket at all, the taxable income, where they've not been paying taxes because they're not supposed to. They'll have to also pay the taxes on this specific gain that they make from the crypto profits. So that is again something where a lot of people see that as a new burden for them to work on this. So yeah, there is definitely that downside. The upside is all of them until the budget session were having a sword hanging on top of them on what happens if India goes in the direction of a ban. What happens to the asset they were holding? And now for them, they are all really relieved that India has taken this approach of defining crypto as an asset class, and they can hold it. They can, without any fear, you can now declare it, and you can pay your income taxes on it without any worry. So it paves a lot of, it opens a lot of doors for everyone. But yeah, I think the problem we have is less grave than the problem we had. So it's okay. I think as a community, we'll get over this as well.
Oh, well, yes. I also want to talk to you about what the global precedence over this is. I mean, there are various countries who have taxed cryptocurrency transactions there. So whether it's about Japan, US, Korea, Germany, I mean, we still are waiting for regulations in many of these countries, but they also have ensured or identified the tax system.
Yeah, I think it depends country to country. Now, the major economies, for example, they have taxed this, sort of not differently from the other income that you make. There's not I don't think there is any country which has actually taken the route of India, where irrespective of your income brackets. Again, I don't know how taxation works in other countries for personal income tax, but I haven't seen any specific income tax or a new income tax bracket or a new definition for income tax in any of the major economies. There have been attempts in, I think, smaller nations to attract crypto investments and investors, where there are, I think, some nations do have capital gains tax if you hold crypto for a longer period and then sell it. But otherwise, most of the large economies do accept crypto income as a legitimate income, and they allow you to pay your taxes. But I don't think there's anything like what India has done, at least not in the major economies.
And that is not all, because on top of all of this, you still have a 1% tax deducted at source. I mean, it doesn't just end, does it? How are you reading into this, and what is the kind of feedback that you heard on this?
I think this part is the most complicated, and I would say, sort of something that has to be really discussed and looked deeper into, because if it all depends also on the implementation and is there a feedback mechanism that is going to be available? Because I think we will need to revisit this aspect of the tax, which is the 1%, because there's a lot of different use cases. There's a lot of different inconveniences that open up. Ultimately, see, this is, it's not like only if your TDS is only, eventually you get a refund if you're not, in that amount that you're supposed to pay. But for a lot of, for example, day traders who rotate, buy and sell a lot of times, for them, this becomes like a big barrier. If you're going to be like, let's say, a long-term holder, keep it for a year or two, I don't think this is going to be a big issue for you. But for people who want to, buy and sell and do that repeatedly in a day, maybe several tens and hundreds of times, for them, this can be a big barrier. And I think this is where I think we'll have to, represent the industry and talk about this and see what solutions can be worked upon. But I don't think it's it's something that's a dead end. It's a good thing that we can discuss now, and I hope that feedback is taken from the industry, because there are certain caveats to this. I feel maybe your next question, the rest of the other issues will also crop up. But yeah, I think some representation from the industry will definitely be needed to make sure that we can align with what are the feasibilities of some of these things.
So, Nischal, let's put it in context then. How many transactions do happen during a day right now? And that perhaps would tell us on how we would see them after 1st of April 2022, on whether or not there is an impact on this one. That's one part of the question. The other is, it's not just a transaction, but people have wallets, and some people have more wallets than one. How is it all going to impact this?
Look, I think in terms of transactions, I mean, on a given day, there are hundreds of thousands or millions of transactions that happen on a platform like ours. But more importantly, we'll have to drill down to an individual level. Right. Now, depending on what kind of investor you are, there are 2 to 3 types broadly. One is a long-term investor. Once a year, 2 years, 3 years you hold and then you sell. Very little effect for you. The second is a mid-level. Once a month, maybe you're trading, doing a few trades here, then and there. Again, less impact. But there's this third kind, which is sort of, a day trader, that, a popular term, or a high frequency trader. What they usually do is they will buy and sell, even if there's let's say a profit or margin of, let's say, 0.1%. You will still do it. But here the problem is, every time you do that, there's a 1% TDS that gets deducted from the trade value, and that's on the entire value of the trade. So if you move about 200, 300 times, your whole capital is deducted in TDS in a way. So that becomes really difficult. And there are traders who trade like thousands of times in a day. They can trade their whole capital, they can rotate it thousands of times, because by that they make, let's say, 5% of the total capital as profit. But in this whole multiple trades that you do, you would have lost, not lost, you would have locked up significant capital in TDS, which then you will only get probably towards the end of the year when you claim it back. So this category of investor, and there's a lot of them in India, I would say lakhs, if not millions. So they will be definitely someone who will be looking closely into how do we fix this for them. And I hope the government also looks into this, because that's a growing market of people in India.
All right, that's all the tax conversation on the cryptocurrencies there. But with that, we'll go for a very short break. When we come back, there's a lot of impact on the gifting aspect of cryptocurrencies and NFTs as well. That is what we will discuss with Nischal Shetty. We'll also talk about CBDCs after this short break.
WazirX and CNBC TV18 present Crypto, Digital Assets of the Future. WazirX and CNBC TV18 present Crypto, Digital Assets of the Future.
Welcome back. We are in conversation with Nischal Shetty, and while we of course spoke about taxes on a greater detail, but Nischal, it's about gifting as well. So even as I did not buy it, if it lands into my wallet, somebody has gifted it to me, that also becomes my liability now because I'm the recipient. How do you read this one?
Mixed, I would say. I think the government probably wanted to take the direction of ensuring that no funny business happens in terms of taxation. But there are real use cases where this will be sort of detrimental. The biggest use case is definitely the airdrops, which have become like synonymous with crypto, which is how airdrops operate is when there is a new project, they would give away a certain percentage of their tokens to the community. And in India, it's a big thing because a lot of Indians have been participating in airdrops of decentralized products around the world. So the question is, when someone gets an airdrop, what happens? Because the biggest problem with an airdrop is that token usually is not trading, and usually there is no price. Now, if you consider that to be zero, then it's great. I don't think there's much problem. But if there is a way to evaluate or value that crypto that you get as airdrop, then we need to find what that way is. And there is no liquidity till a token is listed. So how do people pay? They'll have to pay from their pocket even before the token list. So there is this part of it. The second is NFTs. NFTs have become like a thing which people want to gift their friends, families, because it's images. It's amazing to gift it. And now we don't know what happens when you gift NFTs, because NFTs again don't really have value. They're unique in themselves. Until you don't explicitly sell that in a market and it gets valued by a buyer, there is no way for you to say if your NFT is worth, let's say, 100 rupees or a crore rupees, because there is no buyer for a new NFT that you create. So yeah, this is the other problem, in terms of gifting. But otherwise, I think in general, if it's a liquid asset and you get a gift, you can liquidate part of the profit that you're gaining and probably pay the taxes. The problem is for the ones that don't have liquidity and the tokens that don't have value. This is where the biggest questions are right now.
So Nischal, we still have a couple of months perhaps, before we get to the taxation part of this. It's from 1st of April 2022, right? Do you think the government could come in with clarifications before it really hits us?
Absolutely. I think because a lot of questions have emerged, and it's not something I think of a surprise, because this is definitely there are complications in the sector as well. So now I think it's all on what is going to be that dialogue window, and what are the questions the industry can pose to the government to get answers. I think we have to go in that approach and ask our questions and then wait for the clarity.
Let's also talk about the fact that a lot of international funds and companies have been coming to India for last many months now. I mean, last couple of years, we've seen a huge influx of that. Now with the tax system, have those conversations changed? Given the fact that India has a big population, it's a tech-savvy population, and the kind of enthusiasm that we have seen has been pretty high. How have your conversations been with the global players on this?
I think the biggest is everyone's now, sort of more confident
Okay.
because until now, for them, it was like, wild, wild west, anything can go wrong, anything can happen. And the mental model was let's put whatever money we think, if there is a ban, we may not be able to liquidate or get our money back. Now there is a certain level of confidence. And I think this is going to open the door for, and it's both sides. While investors, the international funds and all, but also Indian founders, they want to now, they're not more confident that okay, I can build a startup in India from which is in crypto. I can raise money funds from venture capitalists who are investing into crypto startups. And I think that confidence has come. So I wouldn't be surprised if India sees a boom in the number of crypto startups because of this budget announcement. And that's going to be great for the sector in general. And even for India in general, I think more startups are better in terms of capital investments that come into the country, the jobs that get created. So I think overall, this has been a win for in terms of boosting the confidence of everyone involved in the sector.
Yeah, surely. We actually have taken a stand, if nothing else. I mean, the tax part is secondary here, but I get your point there. You know, the finance minister also in her consultations or later interviews post the budget said that the consultations within the ministry are still on. There is more that you can expect in sense of cryptocurrencies. A lot of debates suggest that monsoon budget session perhaps would be the time again, but that is something we've been talking about for a long time right now. So when you say that consultations are still on, what are you expecting from that?
I think, see, India is definitely one of those nations which is on the path to regulating crypto, and that's a great thing. But this problem is also not only India. This is a global issue, which is what is the right way to regulate the sector, and everyone's making attempts to do it. No one has really gone ahead and made them into regulation because by the time they fine tune, something new emerges in the sector. So whatever fine tuning happened till 2019. 2020 sort of said, okay, now what about NFTs? So you were thinking about fungible tokens all along, and suddenly non-fungible came across. So I think what everyone's realizing is it's a ever evolving sector. Let's not rush into regulation. And I think with India also, while there is work, you will see that there was attempts to list it. It's not happened because I'm guessing, it is just a guess on my end, is they're realizing the dynamic nature of the sector and where it's ever evolving. So what I believe ideally should happen in India, and I think that might be the way, which is to bring guidelines instead of having hardwired rules and regulations, and then sort of killing a nascent industry or stifling innovation in that industry. I think guidelines to protect investors. So now we have taxes. I think the next step for India would be consumer protection, law enforcement. How do you make it easy for law enforcement to reach out to all the exchanges and all the businesses in the country? I think that step-by-step approach sort of seems to be India is taking that. While we have a bill, I have a feeling that India is going to take that step-by-step approach, which is actually the right approach. Learn and implement. And I think that is going to happen. So I'm really excited about this new approach that India has taken.
All right. And before we wrap, CBDCs is yet another thing that's on the table now and expected to be in this financial year itself. That is financial year, the next fiscal year, that is. It's going to be on blockchain and other technologies is what the finance minister said. She also acknowledged the fact that it is going to be easy to manage, efficient and cheaper. I mean, everything that decentralization and blockchain brings to you are the factors that we will see coming in on this one as well. PM also has spoken about CBDCs in a very strong verdict, strong language there. What's your sense on how would that impact the Indian economy? How many takers? Is it a competition to the cryptocurrencies?
Look, I think CBDC is a no-brainer for any nation right now. And a nation like India, I think we have that amazing opportunity to, get the rupee to be probably also accepted internationally, because Indians are now forming a large part of, let's say, a lot of the international websites. And why do we have to pay, in dollars there? Maybe once the CBDC comes, the benefit of CBDC is any website on the internet can actually accept INR without having to worry too much about the usual, have to create a company in India, take that, much needed licenses. And that's the reason why most of these websites don't want to, accept INR. But the moment CBDC comes, it's direct for them. And for consumers, it will be so much more convenient. And for the Indian rupee, it becomes that sort of a competitor to the dollar. So I think that's a great thing. The challenges, and there are many challenges. One is going to be of technology. What is the right technology that we are going to use, which will enable the number of transactions that are expected from a CBDC? It's going to be a big challenge. And the other is the implementation challenge, because banks and people, everyone will have to understand and learn this technology, build that skill set to be able to use this technology. So that is going to be the second challenge. But I think all of these challenges, we are better equipped to solve if we set on the path to execute this. And what this budget says is, let's execute. And I think that's the best thing, because now I'm so much more confident that India will gain that knowledge faster than most of the other nations. So yeah, I think a very exciting move. Will it compete with other cryptos? Not really, because this is clearly a currency, while other crypto tokens, their assets and utilities, they have different use case compared to digital INR, which will be used for payments and other use cases.
Nischal, before I let you go, let me put you in a corner. And if you were to rate this budget in sense of cryptocurrencies announcements, where would you put it?
I think on a scale of 5, I would give it 4. 4, because the one is all these doubts and questions. I hope that gets solved, so that maybe in 30 days I can say it's 5 on 5.
All right. Nischal, thank you so much for taking time out and speaking to us. We appreciate that. Thank you.
Thank you, Manisha.
WazirX and CNBC TV18 present Crypto, Digital Assets of the Future. Focus, ideate, innovate, enable.